everyone, and welcome to Investment Feature. This is a program of quick company profiles to introduce investors to some of the highest quality small-cap companies in today's market. In this series, we bring you the freshest information direct from key management people who join us as interview guests. Today, we are pleased to have with us Mr. Joseph Mazie, Chief Financial Officer of the Graystone Company, a fully reporting issue which trades on the OTCBB exchange under the symbol GYST. The Graystone Company engages in gold and other mineral exploration and mining operations. In November 2011, Graystone completed a 100% acquisition of the Peruvian mining company Grupo Minero Inca. Very significantly, through this now wholly owned subsidiary, Graystone can operate in Peru without the need for joint ventures or sharing revenue with any other party. Our investing audience will be interested to note that Graystone, GYST, has about 186 million shares outstanding, but the public float is only around 12.5 million shares. So, now let's hear from our guest. Mr. Mazie, you and Paul Howarth are both board members of the Graystone Company. Please start by telling our audience briefly about your backgrounds.
Sure. Paul and I are the managing directors of the company. Paul worked for Bear Stearns until 2008 and has worked with a number of companies that have grown to over 10 million in annual revenues relatively quick, and in fact had one that grew over to 100 million in revenue. My background includes a Master's of Laws in Securities Regulation from Georgetown, and I previously have been the CFO of 2 other public companies. Paul and I took another company public in 2008 and were bought out by our other partners in 2010, which allowed us to start Graystone and take it public.
Very good. And can you tell us specifically why Graystone chose Peru to acquire its initial mining property?
The country has a fairly stable government and is friendly towards mining companies, unlike neighboring countries such as Ecuador. Peru is considered by some to have the largest amount of undiscovered gold resources in the world. And Peru is also currently the 5th largest producer of gold in the world. The country has a labor pool that is skilled in mining that we can pull from, unlike a country such as Mexico. And the lower standard of living reduces the cost of the company. So by beginning our operations in Peru, the company has a lower cost of entry when we compare it to the United States or Canada. It has a more stable environment than the surrounding countries, and it's also a safer work environment than countries such as Mexico. Plus, with a large amount of undiscovered gold, made Peru very attractive to us. This, coupled with the lower regulatory requirements of Peru, made it a logical choice for us to acquire our initial properties there.
I see. Now, also, why did Graystone decide to acquire a placer mining property instead of a hard rock project?
Well, placer mining allows the company to begin with a lower cost of entry. Also, we are looking to generate revenue from gold production as quickly as possible. So placer mining provides the company with both those objectives. A hard rock project can take years, anywhere from 5 to 10 years before any production can occur, and has a higher cost to produce than placer mining. Also, placer mining allows us to be in production within 24 to 36 months. It also allows us to build a foundation in Peru that we can build upon as we grow our operations in the country. So Paul and I did not want to be like a number of other companies out there that have been in the gold mining business for 8 to 10 years and have no revenue. So we decided to acquire the placer mining project because of the lower cost and lower cost to produce, and the fact that we could generate revenue in the next 24 to 36 months.
Okay, you mentioned cost to produce as a reason you were in Peru. Could you elaborate on that?
Yeah, the cost to produce is actually very important to us. When we analyze projects, we project gold prices to be around $850 to $1,000 an ounce instead of the $1,750 that it currently is at. So when we look at projects, the cost to produce must be below those numbers. We see a possibility that gold could drop to $1,200 to $1,400 in the next year. So we want to make sure we are mining at a profit should that occur. There are a lot of companies on the bulletin board that don't do this, but we think it's important in case gold prices do drop to protect the company and its shareholders. So when Paul and I plan for the future, we expect to be doing this for the next 30 plus years, so we want to have a business plan that takes the long term into account.
That sounds good. Now, very importantly, tell us about Graystone's growth plan and your immediate objectives.
Well, our immediate growth plan is to continue to build out Gorilla. We expect to be mining on Gorilla for the next 8 to 10 years. So we want to begin testing and mapping Gorilla next quarter so we can have a strategy and plan on the gold extraction once we get the environmental impact study completed. This also will allow us to continue to build the necessary infrastructure in Peru to support the expansion of our mining operations. And in fact, Paul is expecting to be in Peru in the first 2 weeks of January to begin this process and to look at some other properties as well.
Well, this has been a very informative segment on our investment feature series. Once again, we've been hearing from Mr. Joseph Mazie, CFO of the Graystone Company, symbol GYST. Investors can find more information about Graystone on their website at www.graystone1.com. You can also call the company at 888-933-4933 or send email to info@graystoneVentures.com. Thank you again, Mr. Mazie, for all your comments today, and best of luck with Graystone's upcoming operations in Peru.
Thank you.